Welcome to the Safe Money Retirement Show with your host, Tim Wood. Tim is a retirement and income specialist, certified financial fiduciary, and the founder of SafeMoneyRetirement.com. Tim primarily serves Western North Carolina, East Tennessee, and Southwest Virginia, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Wood is a licensed life insurance professional in multiple states and specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies using life, health, long-term care, and annuity insurance products. And now, here to talk with you about securing your retirement, your host, Tim Wood.
Hello, this is Tim Wood, your host, welcoming you to the Safe Money Retirement Show. I'm an asset and retirement protection specialist and your one-stop source for capital preservation and strategic income planning. I recently had the privilege and honor of doing a live interview again with Tom Hegna. Now, a lot of y'all already know who Tom is. He's a former lieutenant colonel, one of the top speakers in the country. He has authored 6 books. He's been viewed in over 80 million homes with his Don't Worry, Retire Happy public television special. And he's considered to be the retirement income expert in the United States, and I'm lucky enough to call him a personal friend. Let's go ahead and jump in and listen to part of the interview right now. Tom, many retirees listening to this program right now know they have a problem with long-term care, and they hear me talking about it all the time, yet they're afraid to do anything about it because of the cost and the medical underwriting and several other issues. Today, more than ever, we have dozens of products that have simplified underwriting. They are asset-based, so there's no monthly premiums, and you maintain access to your money if you don't use it for long-term care. Now, I'm not telling you anything you don't know. My question is, why do retirees need to talk to someone like me about long-term care?
Well, I say this, any plan, long-term care is the one thing that most people forget about that can wipe out their entire retirement, okay? So it's a big deal. And I say any plan is better than no plan. So I hope people go out and buy long-term care insurance. I have a long-term care insurance policy with unlimited benefits. You can't even buy the policy that I have because I got it, years ago. But if you're not going to buy a long-term care policy, then I hope you look at a life insurance policy with a long-term care rider. That can serve 3 functions. Number 1, it can be emergency fund, because if you need the money out, you can get money out. Number 2, if you don't need long-term care and you die, it goes as a tax-free death benefit to your kids. But finally, if you do need long-term care, there's a big bucket of money there to help you with long-term care. Now, some people have medical problems. They cannot get approved for either long-term care or life insurance. Those people should look at annuities, and there are some even guaranteed issue annuities now that will give you some long-term care coverage. So that's another reason why I think it's so important to work with a financial professional. I've said for years, retirement is not a do-it-yourself project. You don't do your own dental work in your garage, and I don't think you ought to be doing your own retirement planning either. But long-term care is a problem that every retiree needs to face. And again, any plan is better than no plan.
Yeah, I agree. Having any plan is absolutely better than no plan. Yes, long-term coverage, I agree with you as well, is the best, but a lot of people, if they didn't get it younger in life, they, like you said, either can't qualify for it medically or it's just too incredibly expensive. And I also agree with what you said, life with a benefit rider, with a long-term care rider is the best choice because that can be done with a single premium, so there's no ongoing, just like you said. But again, some people do have problems even qualifying for that life policy. So yes, the annuity is always a great way to look at it because there are long-term care benefits you can get with certain annuities that you don't have to qualify for at all. And lastly, yeah, you said retirement's not a DIY project. I agree totally. Yeah, I wouldn't do dental work in my own garage. So yeah, I wouldn't be planning my own retirement if I wasn't a professional at it. So I agree totally. Now, Tom, as you know, I've seen you speak many times, and at one of your speaking engagements, I heard you say that retirees need to ask themselves 2 questions. 1, what do you need your retirement to do? And 2, What do you want your retirement to do? So please take a minute and explain to our listeners what you mean by that and why it's so important.
Yeah, so, I always tell people it's so important to have a plan. And part of having a plan is sitting down with a financial professional. And they're going to ask you questions, but you want to ask them some questions too. And a couple questions you want to have answered right out the gate. Number one, what do I need my retirement income to do? And then I would argue just as important, maybe more important, what do I want my retirement income to do? Well, the nice thing is what we need our retirement income to do is the same for all of us. It needs to cover our basic living expenses, our food, our housing, our clothing, our cell phone. I call that the paycheck. And what math and science, because, retirement's been studied in depth by PhDs all over the world. What math and science says is that paycheck should be covered with guaranteed lifetime income. Things like Social Security, things like pension, things like annuities. That's where they fit, is to cover that paycheck, your basic living expenses. But then what do I want my retirement income to do? That's the paycheck. That's the travel. That's the cruises. That's the fun stuff. And that money can be invested in other things. It can be invested in stocks and commodities and real estate and other things, okay? So again, this is what the math and science, all the retirement research says. You should cover your basic living expenses in retirement with guaranteed lifetime income, and then you can invest in other things on top of that.
Excellent. Yeah, my listeners have heard me always talk about the need, the money that you need, that's your paycheck. They hear me call that a floor. I know you call it sometimes a floor yourself, Tom, but they hear me call that a floor. That's what you need. We know that you need that to cover your expenses. So that's your needs. And then, the paycheck is the fun money. And that can be anywhere. That can still be in an annuity if you want to make sure you don't lose any, but that can be the money that you play with in the market. But that's the money that, if God forbid something happened, it's not the money you absolutely have to have. So thanks for that. Now, in a high interest rate environment, some listeners of my show might think that they should just put all of their money into either a savings account or a T-bill or treasury bill or something like that, a money market. Now, that might be okay for emergency money, but I'd like your opinion on why that might not be okay for money they need for the rest of their lives, and how you think annuities might be a good alternative to look at.
Well, I think it's very important for people to have some liquidity. And, I have some money in a money market fund. The problem with liquidity is it's also pretty expensive because you get a lower interest rate. Now rates are a little better now because you can get 4, maybe even 5% in a money market fund. So, that's good for liquid money. But the nice thing about annuities is that you get to lock in these higher rates for the rest of your life. You see, with a bond, a 2-year bond, the interest rate is really good right now, but what happens in 2 years if interest rates go down? Well, then that's what you're stuck with. But right now, the insurance companies price pretty much off the 10-year treasury for most of their products. And if you got a 10-year treasury near highs, you're gonna have higher payout rates really pretty much locked in for the rest of your life. So I think you need to have some liquidity, but you also need to know what's going on in the growth world, what's happening in the market, and annuities can give you, some of that upside without the downside.
That's very true. Being able to get that upside and not have the downside, as you know, Tom, is a really big deal. And what you're talking about is something that my listeners hear me talking about all the time, and that's reinvestment risk. So, what you just said, if you get into a short term, whether it's a CD or a T-bill or whatever you do, the rates are good right now. Okay, that's fine. If you do it for, whether it's 1 year or 3 years or 5 years, the problem is then we've got to, do something else with that money at the end of that term, and you're going to have to do it at whatever the rates are then. So I know that's what you were talking about. That is an issue, and annuities can have a really good way that we can possibly overcome that. You've been listening to part of my recent interview with world-class economist Tom Hegna. Now, I'm sure you'd probably like to get some more information. We have got a stack of Tom Hegna's books here. You can get a free copy. Just give us a call or log on to our website. Our website is, safemoneyretirement.com, or give us a call, 833-413-SAFE. That's 833-413-7233. And let whoever answers the phone, let them know you want a copy of Tom Hegna's book, Don't Worry, Retire Happy. We will send you one absolutely free, no charge whatsoever. Ton of great information in there. I highly, highly, highly recommend you get your own copy. This is Tim Wood, your host of the Safe Money Retirement Show. I'll be right back after this informative message.
If you were born between 1946 and 1964, you're part of an unprecedented generation of 76 million Americans known as the baby boomers. Have you taken steps to secure your retirement future with options to limit the loss of your principal retirement funds from market risk while utilizing key tax advantages? Why not ease the burden of transfer of funds to your heirs and insulate your money from the shocks of an increasingly volatile world economy? Give yourself and your family peace of mind and certainty that your retirement funds may have the opportunity to accumulate without the risk of market loss. So call now, 833-413-SAFE. That's 833-413-7233. It's time to start being safe. Call now for a complimentary copy of the Safe Money Retirement Book and Information Kit. Once again, our number is 833-413-SAFE. That's 833-413-7233. You're listening to the Safe Money Retirement Show with your host, Tim Wood.
Welcome back to the Safe Money Retirement Show. I'm Tim Wood, a Safe Money Retirement Specialist. In today's case file, we're going to look at the story of Rick. Now, Rick was 62 years old, and he was referred to me because he wanted to find a plan that offered a higher monthly payout than his current pension that he had. He was one of the lucky ones that has a pension, and it didn't pay out a whole heck of a lot. So what we did is, obviously, we did a fact finder, sat down and determined what would be the best thing for him. And we actually found a guaranteed lifetime income annuity that paid him significantly more than his pension. But guess what happened? Rick called the company that handled his pension to get the information that we needed to move the funds, and they countered with even a better offer than we had found from the income annuity. So it's an offer he would normally have had to wait another 5 years to take advantage of. They offered it to him right then to keep his business in-house. It was a better deal than the one we had found. And as I've said on many occasions, my fiduciary duty as a certified financial fiduciary requires that the best interest of my clients aren't just my highest priority, they're my sole priority. So I told Rick I'd love to have his business, but that he shouldn't pass up this deal. It was a great deal. Rick and I have remained friends, and we may very well work again in the future on other things. But for now, I'm really happy to know that I played a role in him getting a larger pension check, and it was significantly larger. So Rick's happy about that too, as you can imagine. Worked out great for both of us. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your hard-earned money is safe from market losses and that you have an income you can't outlive so you can have the retirement that you deserve. Call Tim Wood now for your complimentary Safe Money Retirement Book and Information Kit at 833-413-SAFE. That's 833-413-7233. Or request your copy of Tim's book online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.